Hello friends, very good evening, greetings to all of you. Today, I Kunal Nagpal am feeling immensely pleased to welcome you to the forum of Nagpal Econotech Academia. Dear friends, in today's session, we are basically going to do the detailed conceptual study of the basic framework of the circular flow of income, which is actually the basis of the macroeconomics of any economy. Right? So as we can see here, we have categorized this into the two-sector economy, three-sector economy, and the four-sector economy. So what are these sectors? Basically, what is economics? In economics, we basically deal with the exchange of goods and services and the flow of money in an economy. That is the flow of goods and services and the flow of money. Now, if we are purchasing something, we have to pay something in return. So that is done in the currency denominations or in the paper notes, and that is called money, correct? So in order to develop the basic understanding of the fundamentals of this concept of circular flow of income, we are first going to consider the two-sector economy. This is just to build the basic understanding of the concept, though this is not actually practical. It is not being practiced in the actual scenario. In the actual scenario, we practice the four-sector economy, right? In case of the two-sector economy, we consider the two sectors, that is households and firms, correct? In case of households, see, here comes the households. I am representing households by the abbreviation H and firms by the abbreviation F. So basically, the household sector provides the factors of production to the firms, and this is basically in the form of land, labor, capital, and enterprise, correct? And in return, the firm sector is going to make certain payments in the form of factor income to the household sector, right? Factor income. So what are we seeing? This is the real flow, the factors of production, the factors of production supplied by the households to the firms. This is the real flow, that is the flow of goods and services. And in return, the firms are paying the household sector in return of the factors of production rendered to it from the household. So the factor income is in the form of is actually in the form of rent, then wages, interest, and profit. Dear friends, as we can note, this is basically in correspondence. That is for land. The firm is paying rent to the household. For labor, the wages are being paid. For capital, interest is being paid. And for enterprise, profit is being paid to the household. And also the firms are going to produce the goods and services with the help of the factors of production supplied to it. So in return, the firms are going to supply the goods and services to the household sector, right? And in return, the household sector has to incur the consumption expenditure for the purchase of goods and services from the firms, right? That is the price paid for the consumption of goods and services. So here also we can note that this involves real flow and money flow both. That is, that is when the firm sector provides the goods and services to the household sector, that is the real flow, and in return the household sector pays for the goods and services in the form of consumption expenditures, so that is the money flow. So I'm writing here MF, I'm writing here RF. RF represents real flow and MF represents the money flow. Now you tell me, the first aspect which we had discussed, when the households were paying to the firms, when households were actually supplying the factors of production to the firm, what does that represent? Tell. That is the real flow, because the real flow is actually the flow of goods and services in an economy, and flow of money is called money flow. So that so the factor income, that is the payment made for the factors by the firm to the household, is the money flow. Correct? And also there is the involvement of the financial markets. There is the involvement of the financial markets between the household sector and the firm sector, which acts as the basic channel wherein the households basically deposit their savings. The households basically deposit their savings, and similarly firms are also going to deposit their savings. The flow which we had discussed, this is the actual circular flow in the two-sector economy. Now the savings which are happening, so that is basically taking out the money, right? That is taking out the money from basically the two-sector economy, right? So that we term leakage. In the so after a while we are going to understand the meaning, the basic meaning of the term leakage. As of now, I am giving you the rough overview of this particular term. When we extract money from the circular flow of income in an economy, that is called a leakage. So here, whether it is the household sector, whether it is the firm sector, when they deposit certain amount of money into the banks or financial institutions called financial intermediaries or financial markets, that is called savings. So here it will be categorized in that category of leakage. Also, the firms can borrow a certain amount for investment, so that is called borrowing. Similarly, households can also borrow a certain chunk of money from the financial markets, so that is also called borrowing. So this is the basic concept of injecting money from the financial markets to the circular flow of an economy. So this is termed as an injection. We are going to understand the detailed meaning of the terms leakage and injection just after a while. After we develop the broad understanding of the two-sector economy, three-sector economy and four-sector economy. We have developed the conceptual understanding of the two-sector economy as of now, right? Now we are going to move forward towards the three-sector economy. So, dear friends, what's the three-sector economy? In case of three-sector economy, we have the sectors termed as household, firms and government. So here the household sector and firm sector are the same, but just there is the addition of the government sector. Correct? So now we are going to understand the basic fundamental framework of this particular category. See. Here now we have as we have developed the basic understanding of the working of the two-sector economy, we are going to just fill it up very quickly. This is the household sector. This is the firm sector. The household sector is going to provide the factors of production, like that is land, labor, capital and enterprise, that is the entrepreneur. And in return, the firms are going to make the factor incomes to the households, that is the factor payments in the form of rent, wages, interest and profit. correct? And tell me if I'm wrong, please guide me. Here, factors of production. Tell me in your mind. This is the virtual session, so you have to yourselves be very quick, right? Factors of production, the supply of factors of production from the household sector to the firm sector. Tell me whether this is the real flow or the money flow. I told you that real flow represents the flow of goods and services in an economy. So the supply of factors of production would be the real flow, correct? And in return, the factor payments made by the firm sector to the household sector would be the money flow, right? Now, what's the second round here? The firm sector is actually going to produce the goods and services by making effective utilization of the factors of production supplied by the household sector, that is land, labor, capital, and enterprise. So now the firm sector would supply the finished goods and services to the household sector, and in return the household sector is going to make the payments for the same in the form of consumption expenditure, right? So here again we are going to categorize both the flows as real flow and money flow. So what's the real flow here? The supply of goods and services from the firm sector to the household sector would be the real flow. And the payments made by the household sector to the firm sector for the goods and services purchased by it would be termed as money flow. Here I would like to introduce another concept to you, which is related to this. The synonym of the real flow is actually also physical flow, because here we are dealing with the physical goods or the physical factors of production. And on the other hand, the money flow is also called as nominal flow, right? Be it in terms of the factor income or in terms of consumption expenditure. Now, the mechanism of the financial markets would be the same here. That is, the household sector is going to deposit certain savings. And what are the savings? Savings are the withdrawing of certain money from the circular flow. So that would be leakage. Similarly, firm sector is also going to deposit certain chunk of money as the saving deposit in the financial intermediaries, that is the banks or other financial institutions. So that would be again the leakage. On the other hand, the borrowings by the household sector or by the firm sector would enhance or would bring in more money in the circular flow in an economy. So that would be the injection. Correct? This is the basic framework of the two-sector economy as we have just studied. But here there should be an intervention of the third sector called as the government sector, right? So let me just make some space. As we have developed the understanding of the factors of production, be it land, labor, capital, and enterprise, and in return the factor incomes in the form of rent, wages, interest, and profit. So I am actually making some space for our better understanding and better presentation. Right? I hope you all are making notes simultaneously so that you may be benefited immensely, right? And this would help you to develop the overall strategic framework and the basic understanding of the functionality of the sectors in an economy with the concept of circular flow of income, right? So now, as we had discussed, we are going to introduce the new sector here, that is the government sector. I'm representing the government sector as GOV, right? You may use other abbreviations as well because different textbooks offer different abbreviations, right? So, the house in the three sector economy, because of the intervention of the government sector, which is actually quite practical, government sector is basically responsible for maintaining the rules and regulations in an economy, and its basic functioning is to act as the regulator of the discipline in an economy for its proper functioning in an effective manner. Correct? So obviously, since it is a well-defined sector, it has to incur certain expenses and it has to earn certain revenue. Now, what's the revenue for the government? Government basically earns revenue through the taxes it charges from the household sector and firm sector, right? And that would act as the income from the government sector. So the household sector are going to pay some taxes to the government sector, that is the direct taxes, whereas the firm sector is going to pay both direct taxes and indirect taxes to the government sector, right? And in return, what are the expenses of the government? The government has to provide the subsidies. The government has to provide the subsidies to the firm sector, and that would be an expense for the government sector, right? And for the household sector, the government has to pay in terms of transfer payments. Transfer payments would be in the form of old age pension and other kinds of benefits offered by the government to the households. Correct? And also there are other real flows and money flows in the circular in the three sector economy. That is, here as well, the government sector acts as the basic mechanism for the payment of goods and services. Since the government also consumes the goods and services from the firms, so it has to make the payments also to the firm sector. That is the payment for goods and services, right? And similarly, the government has to make the payments to the household for the factor payments. Because the household sector provides land, labor, capital and enterprise to the government sector as well. So in return, it will pay the factor payments. And also as the government sector purchases the goods and services from the firm sector, it has to make the payments for the goods and services consumed, right? So this is the basic model of the three sector economy, correct? I hope you must have developed a broader picture of this particular scenario as well, right? Here I forgot to mention that the government is the government sector is also going to make some savings in the financial intermediaries, and that would be in the form of savings. and that would be the leakage from the circular flow. And the borrowings would be the injection in the circular flow. Correct? I'm sorry, due to lack of space, due to some space constraints, the representation could not be actually neater. Now, in order to make some space, let's in order to develop the proper understanding of the four sector economy as well. We are very well aware of the fact, as we had seen in the two sector and the three sector economy as well, the basic mechanism of the functioning of other sectors remains same, but there is the addition of another sector. In this case, it would be the foreign sector. Like in this case, we introduce the government sector. In case of four sector economy, we would introduce the foreign sector. So please excuse me if I rub this diagram of the three sector economy. I hope you must have simultaneously drawn in your notebooks, right? So now we would draw again, because this framework would remain same, but we have to introduce another sector, that is the foreign sector. So I would rub it and I would make the diagram once again. So in the four sector economy, we would have the household sector, firm sector, government sector, and the foreign sector, right? So this is the household sector, this is the firm sector. So basically, and this is the financial market. Here, the household sector is first of all going to supply the factors of production to the firm sector in the form of land, labor, capital, and enterprise, and in return, the firm sector would make the payments for the same in the form of factor payments or factor income. That would be in the form of rent, wages, interest, and profit. Correct? This is the role of the financial market. This is the role of the financial market, wherein the households would do their savings, and the firm sector would also do their savings, and the household sector may also borrow something from the financial market, and the firm sector can also borrow something from the financial market. So the savings would be the leakage, and borrowing would be the injection into the circular flow of income. Though that the cycle is not yet complete, I'm sorry for this. The household sector would purchase the goods and services from the firm sector, that is the real flow, and in return, household sector would have to make some payments to the firm sector in the form of consumption expenditure, right? I know I'm repeating, but still we are doing the revision, because in case of four sector economy, we would understand the basic functionality of the basic framework, or the basic functionality of the working of all the four sectors. That is, how do all the four sectors work together in the four sector economy, and this is the actual scenario as we had discussed in the beginning. Households would do some savings in the financial market, firms would also do some savings in the financial market. And that would be the leakage, and the borrowings made by the household sector or by the firm sector from the financial institutions would be termed as the injection, since the money is being injected into the circular flow of income in an economy. So this is the basic understanding of the government's, this is the basic understanding of the two-sector economy. Now, when we introduce the government sector and the two-sector economy, that becomes a three-sector economy. So let's make the intervention of the government sector. I'm representing the government sector with GOV. So here, households are basically going to make some payments in the form of taxes, that is the direct taxes, and so that's the revenue, that is the money flow from the household sector to the government sector. And similarly, the firm sector is also going to make some payments to the government sector in the form of direct taxes and indirect taxes. Then the government sector would incur some of the expenses, that is to do some transfer payments to the household sector in the form of subsidies, or in the form of providing the old age pension, etc. So that will be the transfer payments, the payments made under various schemes. And similarly, the payments made by the government sector to the firm sector in the form of subsidies. When the government pays to the household, it is known as transfer payments, that is like the old age pension. And when the government sector makes payment to the firm sector for its effective functioning, in order to support certain groups of the economy who are actually weak, so we provide subsidies, and that is the expense for the government. And also the government sector has to make the payments to the household sector, that is the factor payments for the factors of production supplied to the government sector. That is, when the household sector provides land, labor, capital and enterprise to the government sector, that is termed as so in return the government sector has to make the factor payments to the household sector, that is the money flow, and that is termed as factor payments. Similarly, the government sector has to pay the firms for the in the form of the payment of goods and services. Right, for the goods and services consumed by the government sector from the firm sector, the government sector has to make some payments for the same, and that is the expense for the government sector, right? Now, this completes the three-sector model economy. Now, in the four-sector model economy, we introduced another sector called the foreign sector. So, in case of foreign sector, which basically deals with imports and exports. So the foreign sector also has to make the payments for the factor services. It has to make some payments to the households, and that is the payment for factor services, right? And the household sector has to make the payments in the form of the incomes, in the form of the expenditure incurred for the imports. Right? And the firms basically import certain the firms basically export certain items. The firm sector basically exports certain items to the foreign sector, and for that there would be the money flow for the receipt of exports. Right? And also for the imports made by the firm sector from the foreign sector, it has to make some payments to the foreign sector, and that will be the payment for imports. Right? And another flow is actually the net transfer payments from the foreign sector to the household sector. So dear friends, this is the basic functionality or the basic framework of the overall functioning of the four-sector model economy. I know that it's not so clean and this thing may not be visible to you entirely. Now, basically, we have developed this framework to actually have the broad understanding of the two-sector economy, three-sector economy, and four-sector economy. We have also understood that while moving from the two-sector economy to the three-sector economy, we introduced another sector, that is the government sector, and then moving from the three-sector economy to the four-sector economy, which is the actual scenario, there is the introduction of the foreign sector. Now, this was just for your basic understanding as we are transitioning from the two-sector model framework to the three-sector model framework and then to the four-sector model framework. Now, we are going to redraw the diagram of the four-sector economy, which is the actual scenario, right? We are going to rub this entire thing from on this board, and then we are going to draw the diagram so that the entire thing would be visible to you, and then you will be having a more clearer picture of the actual scenario pertaining to the circular flow of income in a four-sector model economy. I'm actually doing this quite deliberately, that is drawing and again redrawing, so that this basic concept enters into your mind with a very, very proper understanding. So now, dear guys, after developing the broad understanding of the framework of the basic functionality of the two-sector economy, three-sector economy, and the four-sector economy, with well versed with the concept of the real flow and the money flow, we are going to develop the basic model for the four-sector economy. And I know now you all would have got the clearer picture of the basic functionality of all the sector economies, be it the 2 sector, 3 sector, the 4 sector, right? So I'm directly moving towards the actual scenario which is there in the real functioning, that is the 4 sector economy. So first of all, there would be the household sector. Household sector, then the firm sector, right? Here basically I'm not showing the real flow because we are studying the circular flow of income, that is the flow of the money in an economy, that is the money flow. So that is very well understood how the real flow is also happening, correct? So household sector, firm sector, then comes the government sector, right? I would introduce the foreign sector later on after developing the proper understanding of the function of the domestic economy. That is what is happening within the boundaries of the particular nation, right? So in return of the factors of production supplied by the household sector to the firm sector is basically going to make the payments to the household sector, which is called factor income or the factor payments, and that is done in the form of rent, wages, interest and profit, correct? Right? And in return of the goods and services purchased by the household sector from the firm sector, the household sector is basically going to incur the expenses to purchase those goods and services from the firm sector, and that is called consumption expenditure. So that's the money flow from the household sector to the firm sector. That is the payment made for the purchase of goods and services from the firm sector, right? This completes the money flow in the 2 sector economy. Now, after the intervention of the government sector, sorry, I forgot to mention the financial markets here. That is the financial banks or the basic financial institutions which exist in an economy for the purpose of savings and depositing, right? So the households would basically deposit certain amount with the banks called as savings. Similarly, firms would also deposit a certain amount with the banks called savings. And what are these amounts called? These are the leakages from the circular flow of income in an economy. Similarly, the household sector can do some borrowings from the financial institutions in an economy, and this is called borrowings. And what are these? These are this is the basic mechanism of injecting money in the circular flow, which is called injection. The borrowing is termed as injection. So the similar process occurs between the firms and the financial markets. That is, the firms can also borrow a certain amount from the financial market for investment purposes. So again, this is the injection in an economy, right? Now, this company is a 2-sector model economy. Now, there is the intervention of the government sector here. So this makes a 3-sector economy. Now we are moving towards, that is, we are transitioning from the 2-sector economy to the 3-sector economy. So the household sector is going to make some tax payments to the government sector, right? Tax payments. Similarly, the firm sector is also going to make some payments of taxes, that is the direct taxes and indirect taxes to the government sector, right? And the government sector pays to the household sector in the form of transfer payments. And it makes the payment to the firm sector in the form of subsidies. Both transfer payments and subsidies have the similar concept, but when the government sector makes payment to the household sector, it is termed as the transfer payments, like for increasing their overall efficiency, like the old age pension scheme and the other amounts incurred in the same category. Similarly, the subsidies given by the government to the firm sector is the expense of the government. So that is the money flow from the government sector to the firm sector. Moreover, if the government sector basically avails the services from the household sector in the form of factors of production, so the government sector also has to make the payments for the factors of production consumed. So that is termed, in return the government sector has to incur the factor payments, has to incur the expenses of making the factor payments to the household sector, right? Similarly, the government sector has to make the payments to the firm sector for the goods and services produced by, for the goods and services consumed from the firms. So the payments for the goods and services is the expenditure incurred by the government sector to the firm sector, right? Now along with that, the government sector can also do some savings for the financial markets. So these are the leakages, savings. And when it borrows certain money from the financial markets, that is the banks or other financial institutions, that is the injection in the circular flow of income in the economy. Correct. Now this completes the basic functioning of the three-sector economy. Now, in order to make it a four-sector economy, that is the actual scenario. Right? We introduce the foreign sector. Which is the actual scenario in today's global world. Our economy is the open economy, and I think most of the economies across the globe, 99.9% economies are actually globalized or open economies. So, in case of the foreign sector, what's the role of the foreign sector? When we are engaged in import and export of certain goods and services, then we have to make the payments for the same or receive the income. If we are doing some exports to the foreign sector, we receive the income, that is we receive the receipts of exports. And if we are importing something, we have to make payments to the exports. Sorry, we have to make payments to the foreign sector, right? So, if household sector is actually importing something from the foreign sector, so it has to make the payments. It has to make the payments to the foreign sector, that is called payment for imports. Right? Similarly, when the firm sector imports something from the foreign sector, that is from any other economy outside the national borders, it has to make the payment for imports. That is the flow of money from the firm sector to the foreign sector, payment for imports, right? Now, if the firm sector of our country exports something to the foreign sector, or any that is when the firm sector exports something, exports some goods or services to any other country across the globe, it has to basically supply those goods and services, and in return it would receive certain money called the receipt for from exports. So that is the flow of money into the economy. Correct? And also, the foreign sector has to make the payments to the household sector for the in the form of net transfer payments and the payment for factor services. That is, if the household sector is providing the goods and services, is actually providing the factors of production, like that is land, labor, capital, and enterprise to any other country across the border, to any other country across the globe outside the nation's border, it will receive the factor payments from the foreign sector. And the other mode of payment received from the foreign sector by the household sector is the net transfer payments. So dear guys, this is the basic model for the four sector economy. This is the flow of money in the four sector economy. So this is the realistic scenario which is existing in the societies, correct? So let's have the theoretical reading, that is the basic explanation of this model. Circular flow in a four sector. First of all, we are going to start from the two sector economy, and gradually we will understand the basic concept of the four sector economy. Sorry. The circular flow in a two sector economy without the financial market assumed that there are no savings, that is, the households spend their entire income on the purchase of goods and services, and firms spend all receipts from the sale of goods and services in making the factor payments. That is, when there is only the household sector and the firm sector and there is no financial market, when this was the assumption and there was no government sector, it was assumed that the factor payments is actually equal to the factor payments is actually equal to the consumption expenditure. This was the assumption which we had taken, right? But in actual practice, households do not spend their entire income on consumption. That is, a part of their income is saved. Similarly, the firms also save some part of their receipts for expansion or other reasons. Firms also borrow money to finance their expansion programs, and there comes the role of the financial markets. So all savings and borrowings are basically channelized through a financial market. The financial market basically refers to the institutions such as banks, insurance companies, etc., which transact in the loanable funds. The savings of the households accumulated in the financial market. The savings of the households accumulated in the financial market are basically utilized by the firms for investment purposes. So the circular flow of income continues as shown in this diagram, right? Now we move towards a circular flow in a three-sector economy. That is when there is the involvement of the government sector as well. The circular flow of income in a three-sector economy consists of households, firms, and the government sector. The government plays a very important role in the economic development of a country. It acts as both the consumer and a firm. As a consumer, it spends on the consumption of goods and services produced by the firms, and as a producer, it produces the goods and services for the economy. In addition to the flows of circular flow in the two-sector economy with the financial market, the introduction of government basically leads to the following flows, which we have just studied in the form of a diagram. Now we are elaborating it. First flow between the households and the government. Between the households and the government, that is this one. The money flows from the government to the households in the form of transfer payments like scholarships, old age pension, etc., and the factor payments for hiring the factor services from the households. So this is the basic understanding which we had developed: transfer payments and the factor payments. Money flows back to the government from the households in the form of direct taxes like income tax, interest tax, etc. So this is the basic income of the government sector from the household sector, that is in the form of taxes, and the expenses incurred by the government sector towards the household sector in the form of factor payments and transfer payments are the expenses for the government. Now let's consider a scenario between the government sector and the firm sector. Between the firms and the government, money flows from the firms in the form of direct taxes and indirect taxes. This involves both direct and indirect taxes. Money flows to the firms from the government. Now, the money flows to the firms from the government when the government grants subsidies and makes payment to the firms for the purchase of goods and services produced by the firms. That is the subsidies and the payments for the goods and services. A part of the income earned by the government is also saved and deposited in the financial market. That is the saving. The government also borrows money from the financial market to meet its expenditure. A brief summary of the circular flow is given in this diagram. Correct? That is the borrowing. So this company is a three-sector model economy. Now we are moving towards the circular flow in a four-sector economy. And before that, I would like to emphasize on certain roles played by the government in an economy. The government sector performs the following activities in the economy. Firstly, the government collects the taxes from the households and firms, right? Secondly, the government makes the transfer payments to the households and provides the subsidies to the firms, correct? The government makes the payment for the purchase of goods and services from the firms, right? And the government saves and borrows money with the help of the financial market. That is, we have drawn the entire summary of the role of the government sector in the economy. Now we are moving towards a circular flow in the four-sector economy, wherein there is the intervention of or the involvement of another sector, that is the foreign sector, and this is the actual scenario in the globalized world. That is, it is applicable for the open economies. The circular flow of income in a four-sector economy basically consists of households, firms, government sector, and foreign sector. The various money flows in each sector are as follows. The household sector. The household sector basically provides factor services to the firms, government and foreign sector, which we have just studied. And in case of the foreign sector also has to make the factor payments to the household sector for the factor services received by it from the household sector. The households also receive the transfer payments from the government and the foreign sector. For the government sector we had just studied, and similarly the foreign sector also makes the net transfer payments to the household sector. Households spend their income on the payment. For goods and services purchased from firms, tax payments to the government, and payments for imports. This is the payment for imports made by the household to the foreign sector. Next sector is the firm sector in the fourth sector economy. The firms receive the revenue from households, government and foreign sector for the sales of their goods and services, right? The firms also receive the subsidies from the government. Firms make the payments for the factor services to the households, then the taxes to the government, and imports to the foreign sector. Correct. Now the next sector comes the government sector in the fourth sector economy. The government sector basically receives the revenue from the firms. It receives the revenue from the firms in the form of taxes. Similarly, it also receives the taxes from the households, and the foreign sector also pays some money to the government for the sale of goods, services and taxes and fees. The government basically makes the factor payments to the households and also spends money on the transfer payments and subsidies, the concepts which we have just studied in the diagram. I hope this is purely clear. The concept is clear like a crystal to all of you. Next comes the foreign sector. The foreign sector receives the revenue from the firms, households and government for the export of goods and services. It makes the payments for the imports of goods and services from the firms and the government. It also makes payments for the factor services to the households. Very true. The import payment made by the foreign sector to the firm sector is called the receipts from exports, because what is an import for the foreign sector is actually an export for the domestic firm sector. Now let's understand the significance of the circular flow of income. The study of this circular flow. Why is this circular flow of income study important? Why is this study important? The study of the circular flow of income is actually important due to the following reasons. Firstly, it helps us to understand the mutual interdependence among the different sectors of the economy, namely the household sector, producer sector, government sector, and the foreign sector. It shows that all the sectors are actually complementary to one another in such a way that the economic activity remains intact. Secondly, it shows the equilibrium position of the economy. If there is any distortion in the circular flow, the economy will be in disequilibrium and the smooth functioning of the economy will be disrupted. Thirdly, it helps us in identifying various types of leakages and injections in the economy. The concept about which we had just developed the rough overview in the form of savings and borrowings when there was the involvement of the financial market. Fourthly, it helps us in the estimation of national income. The circular flow shows the three phases of the flow of income, that is the generation phase, distribution phase and disposition phase. It facilitates the determination of three different ways, that is the production method, income method and expenditure method, in which the flow of income can be measured. Now here, my dear friends, I would like to introduce the concept of the different phases of the circular flow of income. There are actually three different phases or three different phases in the circular flow of income. That is generation, distribution, and disposition. Right? First of all, there comes a generation phase in which the firms produce the goods and services with the help of the factor services. That is the production of the final goods and services with the help of land, labor, capital, and entrepreneur. Next comes the distribution phase, wherein the flow of factor income, that is rents, wages, interest, and profit from the firms to the households. And next comes the disposition phase, wherein the income received by the factors of production is actually spent on the goods and services produced by the firms. So in this way, income generated in the production units reaches back to the production units and makes the circular flow complete. So there are basically three phases. That is the production phase, wherein the generation of income takes place. Second is the income phase, wherein the distribution of income takes place. And third is the expenditure phase, wherein the disposition of income takes place. So now let's understand the proper theoretical meaning with the proper definition for leakages and injections. Though we know what is leakage and what is injection, as we had a very detailed analysis of this particular aspect in the form of savings and borrowings. With this example, we have very well understood the meaning of the leakages and injections for the circular flow of economy. Now let's understand it with the form of a definition. First comes the leakages. Leakages basically refer to the withdrawal of money from the circular flow, as in case of savings. When the households and firms save a part of their incomes, it actually leads to a leakage from the circular flow of economy. This is the leakage from the circular flow of the economy. The leakage or withdrawal basically refers to that part of income which does not pass through the circular flow of income. As a result, it is not available for spending on the currently produced goods and services. It means leakages reduce the flow of income. So what are the examples of leakages in different types of economies? In case of two-sector economy without a financial market, that is when there is only household sector and firm sector, there is no financial market there is no government sector or foreign sector. There is only household sector and foreign sector, there is no leakage. But when there is the two-sector economy with the financial market, the leakage is the savings. Then for the three-sector economy, when there is the government sector, the leakage is the tax. That is the saving plus tax. And in case of the four-sector economy, the leakage is saving plus taxes plus imports. Saving plus taxes plus the payment for imports. So here I can write, as this represents the four-sector economy model. So I can write leakages here equals to savings plus taxes plus imports, right? Next comes the concept of injections. Injection refers to the introduction of income into the circular flow. That can be the form of borrowings in case of the two-sector economy. When the households and firms borrow money from external sources like financial institutions, it adds to their income. The borrowings are adding to their income. Such additional income basically does not result in immediate expenditure. So injections increase the flow of income. So for the two-sector economy without the financial market, there is actually no injection. That is when there is no financial market, there is no government sector, there is no foreign sector, only the household sector and firm sector exists, then obviously there is no injection. But when there is a two-sector economy with a financial market, the investment, this borrowing represents the investment. The investment would be the injection in the two-sector economy with the financial market. Then for the three-sector economy, investment plus the government expenditure in the form of factor payments, transfer payments, subsidies, and the payments for goods and services. Then for the fourth sector economy, obviously it would be investment plus government expenditure plus the exports. So here I can write for the fourth sector economy model, injections equals to investment plus government expenditure plus exports. So this basically helps us to understand the basic concept of leakage and injections existing in the actual scenario of the four sector economy model, explaining us the proper meaning of the circular flow of income in the actual scenario with proper applications. It must be noted that equilibrium is achieved when injections is equal to leakages. That is, when the savings plus taxes plus imports is equal to investment plus government expenditure plus exports. This is the key requirement for equilibrium to be attained. This is the equilibrium position of the four sector model economy. Right? Now here, dear friends, I would like to introduce another concept of stock and flow. Basically, the concepts of stock and flow are used frequently in macroeconomics. Some of the macro variables relate to stock while others relate to flow. Therefore, it is very important to understand their meaning so that the variables can be categorized as stock or flow. Now, first let's consider the concept of stock. The stock variable refers to that variable which is measured at a particular point of time. For example, the stock of goods in the godown as on 31st January 2022. It means the stock variables are not time dimensional. Some more examples of stock variables are like national wealth, national capital, money supply, etc. That is, those variables which are measurable at a particular point of time. So they are time independent. Next comes the concept of flow. The flow variable basically refers to that variable which is measured over a period of time. For example, the production of goods during the month of January 2022, the birth rate in the year 2022, the national income in the year 2022 are all flow variables. The period of time could be a day, a week, a year, a month, etc. It means the flow variables are actually time dimensional as they are measured for a period of time. Now let's study certain examples which would help us to clear the concept of stock and flow more clearly. The amount of water in the tank is the quantity of water in the tank at a given point of time. On the other hand, water flowing into the tank from a tap is actually a flow of water being added to the tank per unit of time. Secondly, the total number of houses as on 31st December 2022 is actually the stock concept. while the number of houses constructed during the year 2022 is a flow variable. Now let's study the difference more clearly. The stock variable refers to that variable which is measured at a particular point of time, whereas the flow variable refers to that variable which is measured over a period of time. The time now, according to the time dimension, the stock has no time dimension, whereas flow has a time dimension as its magnitude can be measured over a period of time. For the stock, it is a static concept, whereas the flow is a dynamic concept, right? And also, as we had discussed, or we had a brief overview regarding the difference between the real flow and the money flow. Real flow is also called physical flow, and money flow is also called nominal flow. The real flow or the physical flow refers to the flow of factor services from the households to the firms, right? And in return, when the firms pay to the household sector for the factor services delivered to them, they pay factor income. So that is the money flow, right? So as seen in this diagram, the households provide factor services to the firms, which in turn provide goods and services to them as a reward for their productive services. It is also known as the physical flow, right? I just draw it here for your reference. That is when the households and the firms. Households supply the factors of production to the firms, and in return, firms provide the finished goods and services to the households. This is the real flow. Right? There is only exchange of goods and services between the two sectors, as in this case we are considering household sector and the firm sector. The real flow determines the magnitude of growth process in the economy. For example, when more factor services are offered to the firms, then the volume of production will be more and it speeds up the process of economic growth. Now let's consider the money flow or the nominal flow. The money flow refers to the flow of factor payments, from the firms to the households. And this is basically in the form of rent, wages, interest, and profit. And factors of production are land, labor, capital, and enterprise. Right? So the money flow refers to the flow of factor payments from the firms to the households for their factor services, and the corresponding flow of consumption expenditure. The corresponding flow of consumption expenditure from the households to the firms is called the money flow, right? So the consumption expenditure is basically incurred by the households for the purchase of goods and services produced by the firm. So as seen in the diagram, which represents the real flow and money flow. Money flow can be represented by the dotted lines here, and the real flow can be depicted by the proper arrows. So the firms make factor payments to the households for the factor services, and households spend this income on the purchase of goods and services produced by them in the form of consumption expenditure. It is also known as nominal flow. It involves the exchange of money between the two sectors, right? So, my dear friends, I hope this helps you to develop a proper understanding of this particular concept. Now, I would like to ask you certain questions, right? Which of the following is actually a phase of the circular flow of income? Generation phase, distribution phase, disposition phase, or all of these? Tell me. Yes, all of these. Which of the following is not an example of the flow variable? Number of birds during a year, national income, wheat produced during a year, or national wealth? Yes, national wealth is the answer. Real flow is also known as physical flow. Which of the following sector is actually not included in the two-sector economy? Households, firms, government, or all of these? Government sector. Money flow involves exchange of A, goods and services, B, gifts, C, money, D, none of these. Money flow. It involves the flow of money. Next, I would like to ask, in a two-sector economy, the firms depend on the households. The firms depend on households for the supply of factor inputs, that is land, labor, capital, and enterprise. So that's all for the day, dear guys, and I hope you must have got the proper understanding of the concept of circular flow of income, right? So I would like you to actually draw proper insights about this diagram. I hope it's clearly visible to you, because it will help you to summarize the entire concept in a very well illustrated manner. Take note of if you have missed anything. Here I have mentioned leakages and injections. Leakages is equal to saving plus taxes plus imports, and injections is equal to investment plus government expenditure plus exports. And in order to attain the proper equilibrium, we must have a total number of leakages equal to total number of injections, that is savings plus taxes plus imports should be equal to injection plus government expenditure plus exports. So this is the entire scenario of the four-sector model economy, which is the actual scenario operating in the globalized world that is applicable for the open economies. And I hope this is exactly clear, because this is very, very important, dear guys. It will act as the basis or the foundation for your proper understanding of our subsequent sessions. So here, dear guys, I would like to call for the day, and I really wish you all take excellent care of yourselves until we meet next. Thank you so much. Namaskar. Jai Hind.